So this is how my students flipped $7 to $125 after I dropped this signal. So
So do well to like and subscribe.
So let us go into the analysis of the trade. So this is derivative, this is synthetic indices, and this is volatility 25 index. And these pair trades at the weekend. So I drop a signal with my student, and it took the trade, flip is $7 to $125. $57 to $125. And now you are going to see the reason why I posted the trade, the analysis. You will see the analysis of the trade and how it all went through, right from the daily time frame to the 15-minute execution. So let us dive into now. So this is the daily time frame, and what you need to know about the daily time frame is to know what is the direction of the trend. What is the direction of the trend? So let us zoom in. The break of structure. After the break of structure, the market went up and is expected to come down, at least as a retracement, or we can say it wants to turn and create a new trend. We can say it wants to create a new trend because after creating the choke at the daily time frame at this place. So our daily buyers, we don't want to know much in the daily time frame, because as an intraday trader, what you need to move on to is where your 4 hours, where your 1 hour telling you your buyers, and also your 15 minutes for execution or 5 minutes for execution. So let us dive into the 4 hour time frame. So now we have our daily time frame now, knowing fully well that it has gotten to an overbought zone. That means the trade after doing an expansion. After an expansion, there's a what? Retracement. After a retracement, after then there's going to be another expansion, another expansion. So this is the retracement of the move. So after this, we are going to dive into our 4 hour time frame. And now, this is our 4 hour time frame, and I'll tell you where I took my execution from. On my 4 hour time frame, I did not look for much news. I only just want to know the buyers of the trend, the buyers of the trend. So on the 4 hour time frame, what I just did was to look at, okay, this a higher low, this a this is a higher high, this is a higher low, this is a higher high, this is a this is a higher high, this is a lower low, this is a lower high, and this is a lower low. Then from there, it came down here to create a new lower low, and this is a new lower high. From this place is now my point of interest, whereby I had to start marking my zone. I had to start marking my zone. I had to start marking my zone. This was a money transfer. This is a money transfer. After you set the inducement here, it's transferred the money to this place. So this is a respected institutional candle that sends price to break the structure downward. We are still on our 4 hour time frame. This send the price downward to create a new lower low, and this is a new lower high. Then I pick the zone. I pick the zone. So on my 4 hour, what I just do is that I only pick the zone of where my interest of either a buy or a sell is. So we're going to move directly to 1 hour. So what is 1 hour? What am I looking for in my 1 hour? I'm looking for the buyers and also a right place of execution for my trade. A right place of execution for my trade. So when I saw this on my 1 hour, seeing fully well that this has broken this and it became our lower high. So this is the main lower high. This is the main lower high. Then after the market tapped into this thing, when it tapped into this zone, I now expect to sell from this zone and It was weekend. It was in the weekend that the markets began to create this movement of this bearish formation. And then after I had to take into consideration on entry the trade on my 15 minutes time frame. And what did I see to enter the trade on 15 minutes time frame? This is it. After making a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, I caught this movement from here because this is a point of the smart money trap. Smart money trap where buyers will seem to start entering, whereby buyers will seem to start entering. But what was I looking for when I have known my overall bias? You need to first know your overall bias in every analysis. Know your overall bias. After know your overall bias, know your time frame bias based on how you trade, whether you're an intraday trader or a swing trader. Know your what? Know your hourly bias if you're an intraday trader, because you don't want to stay in the market for too long. You just want to enter the market and few hours later you're out of the market in profit. You get what I'm saying? So what I was expecting here? So there was a rejection because this became a smart money trap. When this became a smart money trap, this became a smart money trap. When this became a smart money trap, I expected the price to break down below. And immediately it broke down. I had to just take my entry at this zone. I had to take my entry at this zone. At this zone. Let us go down to 5 minutes. So at 5 minutes, there was an exact tapped in into the zone and created a double top formation, which is so much peculiar regarding the synthetic indices. Synthetic indices respect double top, respect double bottom so well in all time frame. And if you can find a double bottom or double top at a specific side of reversal, then you are at the right execution. You need to execute directly when you find the double top and double bottom in any time frame of interest based on the kind of trader that you have. So now that we saw this, it tapped in and formed this double top. Immediately, I set my execution, and now I'm going to show you what the trade looks like in an executed account. What the trade look like in an executed account after I dropped the signal with my student. So this is the trade, and the trade moved for about 6 hours downward. The trade moved for about 6 hours downward. Oh, okay. It's about 12 hours, about 12 to 16 hours, about 12 to 16 hours downward. So you can see the trend. So if you want to understand how to do a proper top-down analysis, you can just subscribe on this channel and also like the channel for more updates just like this. So let us move on to what make me set my TP, what make me set my take profit from that zone. Let us go to 1 hour time frame. In the rules of understanding structure mapping, you need to know that it's a lower high, lower low, lower high, lower low, except if it is in a ranging market where the market tends to keep bouncing up and down within a specific price range, within a specific price range. But now, where we see that the price has expanded here, it retraced. What are we expecting? An expanded form. Let me show you. You expect a price to do what? You expect a price to do a retracement into a specific zone of the extended form, then extend downwards then extend downward, causing a break of structure, here. So what are you expecting when the price extend? After extending, it traces back to a specific zone of interest. It traces back to a specific zone of interest. And when it retraces to a specific zone of interest, what are you expecting next? You're expecting the market. Always love the trend. Don't trade against the trend. The trend is your friend. You're expecting the market to break the structure. You're expecting the market to break the structure downward, and that is what the market has done. So that's why I said to take profit at this low, because that's my take profit, realistic take profit. But you can extend it downward because you know that the market will not easily reverse at this low here because we're not expecting price to bounce back because it's not a ranging market. So the price got to the side and you can extend your take profit to a little lower below the swing low, and that will give you much more profit. So this is the strategy that works. This is the strategy that works, and this is the strategy that I use that 90% of traders on dairy also use and milk the market. So do well to subscribe and to like the channel. Shalom.